Is your wealth exposed to different currencies as well as different asset classes? 80% of my wealth is in a currency that is a 20% rise or fall against the euro is uncommon.
No, I do not diversify across different currencies. The reason is that the volatility across currencies usually is not too high. So when you look at the US dollar versus the euro versus the Japanese yen, yes, there are some movements, but they tend to be in the 10-20% range maximum per annum. If you are in a country where you've got a very volatile currency and you need to own that currency because you use it every day, and you've got a currency that potentially also very long-term underperforms the US dollar, what I would do is I would try to estimate how much does the currency long-term devalue? What's my expected rate of devaluation? Very often what we see with those kind of currencies is also that, say, fixed deposits get paid more in interest. Right, so if you've got, say, I don't know the numbers now, but if you take, say, the Turkish lira, probably if you invest in the Turkish lira in the bank account, you will have a higher return. You will get more interest payments versus, say, the US dollar. If that's the case, then just estimate how much does the lira actually underperform year over year and how much does the US dollar outperform. And if your interest rate that you make is higher than your expected underperformance, it might make sense to diversify a little bit with the local currency. Again, because you need to have exposure to that local currency anyways. But I don't trade the currencies actively because, again, I don't have an edge in the market. I also don't diversify in them because the volatility isn't high enough. And again, the expected value of owning a currency tends to be negative against monetary debasement, usually, right? So for the US dollar, that's even the case. The US dollar being one of the strongest currencies over the last decades, still the monetary base expanded by 6.8% per annum. And usually we didn't get that kind of return. So the real interest really is even negative for the US dollar. So I don't want to own too much fiat. And for the fiat that I do own, I just have it in the US dollar. I also don't want to overcomplicate things. There's also some value in keeping things simple. And there might be a bit of diversification benefit of not just holding US dollars, but maybe also some euros and some yen. But that diversification benefit for, say, let's say I've got 30 or 40% of my net worth in the current market in fiat because it's the valuations are very high, right? I want to be rather risk off. If I have now those 40% in the US dollars, or if I have 20% in US dollars and 10% in euro and 10% in yen, it probably will not move the needle that much, right? If I expect currency movements in valuation to just be, say, up to 20% per annum, and I've got 10% of my net worth in something else, I basically changed my net worth by 2 percentage points in a year. And doing all of this hassle, doing the rebalancing probably is not worth it if instead I could focus the time on timing the crypto market better, trying to find new ways to time it better, and outperforming the market that I'm actually most informed in. So that's how I think about this. But yeah, if you're okay with the overhead and if your cash position is huge, or if you are based in a country where the currency is very weak, but you've got extremely high interest payments, it might make sense to diversify in the fiat world a bit as well. Will BlackRock, Fidelity, etc. accept a 50% drawdown on their colossal average purchase price of 60K? Yes, they will. A lot of this is just owned by the retail investor, right? So this is not positions made by the companies. They just created an investment vehicle, take some fees, and don't have any exposure to Bitcoin at all. This is mainly retail money. And retail tends to also just forget about Bitcoin. If an investment is in the negatives, people tend to just not look at their portfolio. They just ignore the problem. And when investments are in the positives, then suddenly people get excited about it. As long as we're in the negatives, I do expect the selling pressure rather to ease by those people that own, say, the ETFs by BlackRock. But of course, there's still selling pressure by the long-term holders that bought Bitcoin much earlier. BlackRock has been buying almost 1 billion in Bitcoin for the last 4 years. What's your opinion on the odds being we get a pump soon because institutions tend to buy when price drops and vice versa? Again, the institutions don't necessarily have positions besides, say, MicroStrategy, right? And besides all the treasury companies. When we just look at the ETF purchases, I think that's mainly retail, potentially also family offices, etc. It's not that BlackRock itself buys the Bitcoin for themselves. They buy this in the name of other people. And so, yeah, it's just the regular retail flows that always make the ups and downs of the market. Let's actually talk about this a bit more. have a look at this here. This is Ethereum's price versus its best moving average. And what's very interesting about this is the best moving average, first of all, is the 34-day simple moving average. What's interesting about this is that here with this asset, we are the closest to potentially turning bullish. We're still bearish, we are still below that moving average, but if one day we were suddenly to rally by quote-unquote just 11%, if we were to close a day at $2,150 or so, and that level is coming down day after day, then Ethereum could suddenly bounce. And when Ethereum bounces, there is a lot of impact on the altcoins as well. So that's the potential, at least short-term relief rally that we might get. We might see a better performing Ethereum price. Now, will this happen tomorrow? Will this happen the day after tomorrow? Who knows? But there's also a potential support that I think many people have actually on their radar, because this is just the US dollar price. Many people look at US dollar prices, and interestingly enough, those bottoms tend to align relatively well and the tops align as well, right? Those are two parallel lines. It's nothing just connected. Those are parallel lines, and we might already bounce right now. We have bounced once at the current level at the end of 2022. So we could draw this double floor over here. And there is a chance that we already get above the moving average soon, and that then Ethereum rallies quite a bit. There's also a chance we continue to fall and we might revisit the support. But we're getting closer and closer to potential important supports, so the likelihood of turning bullish on Ethereum increases over time. I find this interesting because the picture for Bitcoin does not look as bullish. Right? For Bitcoin, we are still quite far away from the best moving averages, and that might be a potential turnaround. Maybe Ethereum can soon outperform Bitcoin again. I'm still betting on falling prices of Ethereum personally, but I might change that rather sooner than later, and we might see at least a short-term altcoin rally again, given that we are close to a support that I believe many people watch, and given that we are also very close to the best moving average. Again, we are not hyper close to it, but among the main altcoins, among the main cryptocurrencies, right, Bitcoin, Ethereum, Solana, Ethereum has the strongest chance to turn around because of its support and because of its closeness to the moving average. We've done very well with our moving average trading vault, by the way, right? It was launched 40 days ago and it's already up 44%. Of course, that's not sustainable, right? Annualized, that's 2,500% almost. But yeah, we are doing fine following the trends. And that's a nice thing, right? It's a nice diversifier to a portfolio. If currently you're mainly long and you don't really care about potentially hedging yourself, following trends, at least with a part of your portfolio, I think makes a lot of sense. And yeah, historically, right? Bitcoin's backtest made 115% over buying and holding. Ethereum's backtest made 210% over buying and holding. And that's what I hope for will happen going forward as well. So far, we are on track. We're even above our plan. This is Solana with its best moving average. Again, there's a bit more distance to be overcome here. That's a close to 30% rally, no, even more than that. It's a 35% rally or so that we need. We need to get above $110 per SOL in order to turn bullish. So the picture is slightly different for different major cryptocurrencies. They're all, of course, bearish, but they will turn around at different points in time. So keep that in mind. Ethereum, of course, will be a very important trendsetter for the altcoin market in general as well. This clip is coming to an end, but the entire episode is available over here. Just click this to watch the video. Take your time. Yeah, just click here. Looking very much forward to seeing you on the other side. Cheers.